Recording is on. Welcome everyone. This will be today's bonus session, bonus live webinar. Just a question, guys. What if I didn't create the recap video yesterday? So what if I just break down the actual trade from yesterday in this live session? Would that be good? A live trade recap video?
Yes, of course.
Yes.
Okay. Perfect. So actually, I've broken down every single higher time frame price intention at this region in yesterday's live session. So I believe we don't have to talk about these higher time frame intentions because, as I said, I was expecting a break of this actual 4-hour supply zone. Sorry, so this was a 4-hour supply zone at this region, and I was expecting a break of this 4-hour supply zone and the continuation of the bull run to the upside, which has happened actually today, as you can see. But we will talk about this later in the higher time frame intentions topic. So let's just break down the actual trade in few minutes. So, sorry, let me just go back to the 15-minute chart and mark all of the zones out first. Price was at this region yesterday, and we had few valuable demand zones at this region. These 3 demand zones at this region. Actually, there was another demand zone at this region, 15-minute demand zone, but I didn't mark it. So, as I sent you in the market updates and in the live session, I was expecting a tap of this extreme demand zone down here, or I was expecting a tap of this flip zone down here. I was expecting a reaction on either of this demand zone or either of this demand zone. And why did I say that only on these 2 demand zones and not the 2 ones upper these? Why did I say that I was expecting a reaction on this demand zone or this demand zone? Can you just answer me? Why was I expecting a reaction on this demand zone and not on this demand zone or this demand zone? There was liquidity here too. Here's liquidity, here's liquidity.
It was in lunchtime, I think.
Exactly. This was lunchtime, this was lunchtime. This zone, as you can see, this inefficient push to the upside has formed in lunchtime. In the new lunchtime zone, because daylight saving has been kicked in, as you may know. And this was the new lunchtime zone, and this was the other new lunchtime zone. And the only not lunchtime zone at this region was this one down here. And of course, the overall flip zone. Down here, this was the origin flip zone that has flipped the overall flip zone. Because, okay, let me just zoom out and show you that real quick. Here was this demand zone. This supply zone has flipped this demand zone, as you can see. It's a perfect supply to demand flip. Reaction, flip, reaction, demand to supply, flip, flip. So flip, flip. And this demand zone here flip the overall supply zone that has flipped the demand zone. So this is a really, really valuable flip zone. Okay, but above this flip zone, we had several demand zones that has caused the inefficient push and break of structure to the upside at this region, as you can see. So I was expecting a reaction on this demand zone or this demand zone because the higher demand zones, so this one and this one, was in just the premium range. As you can see, it's too high to expect a reaction on. If price reverses somewhere around here, price will tap into some deeper demand areas, for example, this one or this one, and it will reverse on these deeper demand areas and won't just reverse on these upper areas because it has to collect fuel from the downside liquidity zones. It has to collect more orders from these demand zones, and it won't be able to reverse on these zones upside. Okay. And one more confluence was, of course, the lunchtime zone. So I was expecting a reaction on this demand zone. And as I sent you, if there will be a change of character on this zone and there will be a perfect entry criteria setup, as I told you in the live session, I will enter in this trade regardless. And as you can see, a perfect entry criteria setup has formed because price has tapped into this demand zone, tapped this overall demand zone, mitigated more than a 50% of this zone. So it was a deep mitigation, perfect criteria, deep mitigation, tick. Okay, after this, there was a huge reaction, as you can see, tap and immediate V-shape recovery to the upside. Second criteria is tick, perfect. So let me just track the criteria with a text. Deep mitigation on the first tap, second V-shape recovery, third criteria. What's the third criteria at this region? I'm just asking you.
Change of character.
Change of character, exactly.
Liquidity build.
Fourth, before the liquidity building up. What's the fourth criteria before liquidity has been built up?
Inefficient push.
Exactly, inefficiency. As you can see, okay, I will just show it later after the criteria. What's the fifth criteria?
Liquidity creation.
Exactly. What's the sixth criteria? Someone? The sixth criteria is the liquidity sweep. Liquidity has been swept into this zone. As you can see at this region, there was a liquidity sweep. And we can say that the seventh criteria is the inefficiency fill up. Because as you can see, the higher time frame inefficiency at this region has been filled up with this movement, right? So basically every single criteria is fit. The higher time frame flip was fit, the higher time frame break of structure, the higher time frame mitigation. So this was a mitigation of the higher time frame zone, deep mitigation of the zone, V-shape recovery on the zone after the immediate tap of this zone, inefficiency after the mitigation of this zone, change of character here and here to the upside, liquidity creation for the zone here, perfect liquidity creation, liquidity sweep to the zone, here's a liquidity trend line swept, inefficiency fill up on the higher time frame. This was inefficiency on the higher time frame. Actually, this was the only inefficient region, but price has filled this inefficiency up, as you can see with this movement. And the inefficiency fill up has been started from this supply zone up here. So this supply zone, from this supply zone, price has filled the inefficiency with inefficient push. So basically, this was a perfect criteria trade for me to enter. Okay, let's just talk about the zone selection, because I saw that lots of you guys were confused about the zone selection and why did we actually choose this zone instead of the above one. Okay, this is actually pretty reasonable. Let me just zoom in and you will see it better. So you asked me that why did I choose this downside candle instead of this candle? Because on the downside candle, as you can see, there's no inefficiency. On the downside candle, here's no inefficiency. Just a maybe tiny one, sorry. So just a tiny inefficiency on that candle, as you can see, really tiny or literally no inefficiency. So why did we choose that candle actually instead of the above one that has caused the overall inefficiency? Can you just answer this question? So why did we choose this downside candle instead of this candle? Liquidity above. Sorry guys, just a minute. Okay. Sorry. I'm just a little cold. So why did we choose this candle? It's because there was liquidity above this candle. And as you can see, if I mark this zone out, and we just remove this zone. If I mark the upper zone out, so this one, this zone perfectly lines up with the liquidity. So basically, if you open a position on this zone, you open a position inside of a liquidity pool. So as you can see, if I did set an order limit on this candle, it was basically inside of the equal lows. It was lined up with the equal lows, perfectly lined up with these, all of these equal lows. And these equal lows will be swept out, right? And which zone could hold the actual liquidity sweep? This zone could easily hold the liquidity sweep because there's enough room between this zone and between the liquidity. And if I set an order limit on the 50% of this candle, there will be more than enough room to actually stop the price and reverse the price at the 50% of this candle after the liquidity has been swept. So if you see something like this, you can't really open a position inside of a liquidity pool, even though this is the correct zone in this case. This is the correct zone because this zone has created the inefficiency here. This zone has created no inefficiency. This zone created inefficiency, but it's inside of the liquidity pool. Liquidity will be stronger than inefficiency. Liquidity is always stronger than inefficiency because if there's liquidity, you can't open a position inside of a liquidity pool because you'll be swept out. And that's what happened, as you can see. If you open a position here, you get stepped out by this movement. And this zone, the 50% of this zone, the downer area, could easily reverse price to the upside. As you can see, perfect 50% tap, reversal to the upside, TP hit. This was the last candle before the movement. Yeah, that was the answer. Yeah. So actually, there was two change of characters at this region. And the actual change of character has been caused by this candle or this candle. And as you can see, we have a higher time frame. I mean, not higher time frame, higher region supply flip also here. This was a flip, right? This is a perfect flip. Price has reacted on this extreme supply zone, reaction on this zone, reversal, and from this candle, price has swept the liquidity again to the upside, right? But before this flip zone has happened, let me just mark this out. Before this flip zone has happened, there was another change of character, which could be hard to identify because it's an inside bar. As you can see, if I zoom in, there was a perfect inside bar. So this candle's high and this candle's low. Between this high and this low, there's a candle inside of this high and this low, right? So this candle's high is below above the last candle's high, and this candle's low is above than the last candle's low. So this is an inside bar. So every inside bar is a supply/demand zone, right? In this case, this is a supply zone because every inside bar is a supply/demand zone. On the downside, on the short side, that will be a supply zone. So this is a perfect inside supply zone. So let me just remove these lines. So this supply zone has been changed character here from this candle or this candle, right? So there was a change of character on this supply zone. So this was the extreme of the whole movement, and not this is the extreme of the whole movement, because this is a flip zone, this flipped the supply zone. But the extreme of the whole movement was this candle down here that has caused the overall change of character, that has caused the first change of character to the upside. So the extreme zones, I mean, not the extremes, because that's not really true. The zones that causing the original change of character, causing the first change of character, will be always stronger than the other zones. So basically in this region, this is, in this case, in this scenario, this is the extreme of the zone. This is the extreme of the whole movement, right? This is the extreme zone because it caused the extreme, it caused the first inefficient push to the upside and the reversal, but it also caused the first change of character to the upside. And as I said, every single zone that has caused the first change of character and has caused the first shift in the order flow will be always stronger than the decisional ones. So in this case, this is the extreme, this is the decisional one. That's another confluence, that the decisional one, so this one is inside of a liquidity pool, so you can't really open a position on this zone, because as you can see, from this candle, price has flipped the zone, flipped this supply zone up here. Inefficient push started from this candle, perfect demand zone, but this candle is also inside of a liquidity pool. As you can see, you can't open a position on this zone because you'll be swept out and you'll become part of the liquidity. As you can see, lots of people has opened positions on this specific demand zone. You can tell it by the price action, because as you can see, sorry, I didn't mean to delete this. I meant to delete this. So on this candle, there were lots of orders sitting, as you can see, because immediately when price stepped into this zone, it had a reversal, and it was struggling to break below. It created more liquidity. It was struggling to break below. It was struggling to break above. So lots of sellers and buyers were fighting at this region. And yes, that's the end game of this supply demand zone. Liquidity, sweep of the liquidity, more liquidity built up, picked up the liquidity, tapped into the 50%. Buyers has overcame sellers, perfect entry, TP. So yeah, once again, every single origin of the change of character will be stronger than any other zones. If there's liquidity above, that's one more confluence. Is it understandable?
Yes.
Yes.
Okay, perfect. Would you like to ask any other question about this trade?
May I just one quick, because if you didn't refine that lunchtime zone on 1 minute, actually the price is coming from 5 minute supply.
Yeah.
Is it the problem, or we can count it as a I don't know.
Let me just, I know I understand the question. Let me go back here. Remove this one from here. So basically, if you see something like this,
Yes,
you can count it as a 5 minute mitigation of this supply zone. But inside of this supply zone, there's a 1 minute supply zone that has not been mitigated yet, right? And this supply zone has been mitigated by only a weak and immediate reversal. So basically, it was maybe a 20 or 15% mitigation of this whole zone. So I didn't really count it as a mitigation. I was expecting the mitigation of this upper supply zone here. So yeah, If you're insecure about it, you can wait for a confirmation entry on this zone. If you think that it's coming from 5-minute supply zone, you can just always wait for a confirmation entry. For me, it was a full perfect criteria setup, and all of these criteria that has been listed out above here, I did remove them. Let me just take it back. Sorry. So all of these criteria that has been listed here were just stronger confluences for me than this little supply tab, this little supply mitigation. So these criteria for me were stronger than this supply mitigation. So I was sure about this trade. And also that was one more confluence that price didn't actually tap this upper 1-minute supply zone. Make sense? Okay.
Of course. Thanks.
Okay. Any other question about this trade? And what about the weak low idea on the 1 minute? I don't really track the weak lows on the 1 minute. And actually, yeah, this was you could call this a strong high, but if you take a look at the 5-minute or the 15-minute chart, let me just go down here. If you take a look at the 5-minute or 15-minute chart, this is a strong high. Of course, price didn't take the strong high out, but we don't need a 50-minute/5-minute change of character after a 15-minute demand mitigation. This is the first rule. After a 15-minute demand mitigation, we need a 1-minute change of character and perfect criteria setup. If price changes character here and changes character on the 5-minute chart too, that will be one more confluence, that will be one more confirmation for the longs. But actually 1-minute change of character after a 15-minute demand mitigation is perfectly enough. So we don't have to wait every single time for a 5-minute change of character after a 15-minute zone mitigation. 15-minute zone mitigation, double change of character on the 1-minute chart, right? Because there, sorry, here, change of character, double change of character, that's perfectly enough confirmation to go along. This would have been the best confirmation, of course, but it doesn't really happen very often. Because in that few people got stuck with weak, strong, low, didn't take the trade. Yeah, basically you're overcomplicating these. It's important to track your weak highs and strong highs and weak lows and strong lows out. It's really, really important. But the basic rules are more important. So the basic rule is that 15-minute zone mitigation, double change of character, perfect criteria, entry. That's all. And there was double change of character here. First change of character on this line, on the inside bar line, second change of character here. This is perfectly enough confirmation for me to go along. And of course, this liquidity building up here is one more perfect confirmation for me to go along. These strong low, strong highs breaks doesn't really happen very often. Because if it breaks, let's say it breaks, as you can see, with this movement, of course, this was a news movement. If it breaks, there will be a deeper pullback again, and you miss this overall movement to the upside. So there's always a good entry point on the 1-minute chart, and that's why we all need the 1-minute change of character instead of a 5-minute change of character. 1-minute zone, 15-minute zone, 1-minute change of character. You want to be in the extreme of the move. You want to catch the extreme of the move. Okay? Makes sense?
Marcel, I have a question too.
Okay, I'm here.
I took a continuation trade yesterday, and I was going to ask if it was valid.
Which one?
Here I took it as a flip zone because it came from this mitigating this zone. Here,
Yeah.
I marked this zone and I bought there with the target in here in the same place that you put it. Was it valid or was too risky?
For me, I would consider it too risky, but if it fits your criteria, if it fits in your plan, then you can take it. Of course, that's a flip zone. But for continuation flip zones, I need liquidity creation too. So there was no liquidity creation. So for me, that would have been risky. So I wouldn't take this trade, but I'm happy for you that you take it. Because
okay,
in my plan, for my criteria, for the continuations, I need liquidity creation. Without a liquidity creation, I'm not entering in a continuation setup. But as you can see, this setup worked out perfectly, right?
Right, yes, it did.
Hey man,
Hey, bro.
you can mark the trade that I took yesterday just above the little demand zone, just above your entry point. Yes. And look at that, there is the liquidity above.
Of course, there is a liquidity.
Yeah. So that was also a good zone to enter.
Yeah, and why was it actually a good zone? Because it changed character to the upside. So here was actually a downside movement. So change of character here to the upside, change of character here to the upside, change of character to the downside with this movement here. Basically, this was the last demand zone. So this is not a real change of character. This is a sub change of character to the downside that is building up a liquidity for the downer zone. So, but technically, this was a change of character here to the downside and price exchange character up to the upside again. This was the last zone that has caused the last break of structure here to the downside. Reaction on this supply zone, as you can see, here's a reaction. And from this demand zone, prices actually flipped that zone. And there was a change of character to the upside, liquidity building up for that zone. Entry point, entry opportunity. And Doranko Jones took this trade.
Yes, exactly.
Why did you close it at 1-10 risk reward ratio? This is a perfect trade.
Because I
You
was
pussy.
happy with my profits.
You pussy.
I was happy with my profits.
Never be
1 to
happy
10.
with your profits.
Yes.
Always test your limits. This could have been a pretty good entry target. I mean, a target point here. 1-13 risk reward ratio, and this was the 1-10 risk reward ratio. Let me just find the good. Yeah, this was the 1-10 risk reward ratio here. Yeah, this was a pretty good setup. But after this high impact movement to the upside, I would consider this risky to enter here at this position. But yeah, it worked out perfectly.
I had the balls, you know.
You had the balls, man. Always have the balls to trade. And see, guys, this is really, really important. John had the balls to enter in position because he was sure about his analysis, right? He was sure about his analysis because there was a change of character to the upside. There was a flip zone. This was a flip zone. There was liquidity about the flips. Yeah, about the flip zone. There was an inefficiency. There was a cancellation of the overall bullish trend. There was inefficiency too. There was liquidity. There was anything needs to be a valid setup. So John had the balls. John did set an order limit on this zone, booked 10% on this trade. So yeah, the most important thing in trading is to follow your plan. First of all, create a plan. First of all, create your own plan. And after you've created a plan, just follow that plan. Because without a plan, you'll be lost. As I said in the previous live sessions, I said this several times, you have to build a plan for each day, right? We will build a plan for today too later, but you have to build a plan for each day. If you have a plan, if you're trading with a plan, if you have a plan for a whole day, then you'll know what you can expect from that day. And if the other thing happens than you're actually expecting, you can always change your plan. You can create a new plan. For example, I was expecting a tap of this zone down here, and I was expecting a change of character on this zone. That was my original plan, right? I was waiting for this the whole day. But let's say price just taps this zone and creates a flip zone to the downside and flips this overall demand zone to the downside. My plan changes and I build a new plan for the new scenarios. I build a scenario that if this demand zone is being flipped, I will wait for a liquidity creation, I will wait for a supply tap, I will wait for a clear supply, I will wait for a confirmation entry, and I will wait for a new target, which could be this one. I build a new plan. You have to adapt, but you have to have an original plan. Without a plan, you'll be fucking lost. Sorry for swearing, but you'll be lost. Actually, that's the quote. Plan the trade and trade the plan, right? Plan the trade and trade the plan. This is really, really important. And that's why you have to build a plan. And as you can see, both me and John had a plan here. I had a whole plan building up for this scenario. I built up a whole plan in the live session for this scenario. So it was easy for me to pull the trigger because I knew that this was going to happen. And I was waiting for this actual setup. And it was so fucking easy for me to pull the trigger at this region because I knew that this setup was planned by me. And I was trading my plan. I was trading the plan that I was actually planned, right? And John did the same. John planned another setup here. He was trading his plan. It was so fucking easy to pull his trigger because he was expecting for this reaction. He was expecting for this scenario. And that's why you have to always build a plan and not just randomly open positions if you see a supply tap and 1 minute change of character, because you'll be swapped out. If you open a position on every single change of character that you see on chart, for example, oh my God, price exchange character here, let me just open quick position on this region, you'll be swapped out. You need a higher time frame plan. That's why I'm always saying that see the higher time frame perspective, combine the time frames together, build a higher time frame plan, and trade the 1 minute based on that higher time frame plan, because the 1 minute in itself will be worthless, will be useless. If you're only trading on the 1 minute chart, that will be useless. You have to build a higher time frame narrative. You have to build a higher time frame narrative and trade the actual higher time frame order flow. If you're fighting against the order flow, you'll be swapped out. Actually, the 1 minute chart is just a noise. The whole 1 minute chart is a noise. Just look at this shit. This is a noise. This is a whole mess. This is a noise that you can't really follow if you don't know the higher time frame perspective. If you zoom out and see the actual higher time frame perspective and build up a plan for that higher time frame perspective, you'll know that when can you enter in a lower time frame, when can you actually enter on the 1 minute chart. For example, that was the plan. I had this demand zone marked out. I was waiting for a reaction on the 1 minute chart. I wasn't even looking at the charts until this step has happened, because this 1 minute chart is just a whole mess. If you open a position on every single random 1 minute change of character, for example, oh my God, here was a 1 minute change of character at this region, because as you can see, the wick is higher than the supply zone's last wick. There was a 1 minute change of character. Oh my God, I will enter a position here. You'll be swapped out because you don't know the higher time frame intentions. You have to wait for your higher time frame plan and build the higher time frame plan before every single session, before you start trading in every single session. This is really, really important, guys. I'm telling you. Just please do this. And also use the criteria tracker too. Use the training plan planner, use the criteria tracker, use the resources. That's why we've created these resources, because it's important to use. Okay. And sorry for this longest monologue, but it was so important to clear this topic.
Hey, Master, can I ask a quick question?
Of course, mate.
So you were expecting a bullish trend yesterday while you were in the webinar, right?
Yeah.
But when you told that it's going to mitigate the deeper zone, demand zone, it already have changed character, right?
Yeah, it has.
So,
but it hasn't. Actually, it has, but it hasn't. Why am I saying that it changed character and not changed character also? Because sometimes the change of character is just a liquidity sweep. That's why I said you have to know the overall higher time frame trend. Let's say here's a trend. Here's an upside trend. This is the higher time frame trend. Let's say the 15-minute trend. Let's say price creates something like this. Break a structure to the upside again. There will be a demand zone that has crossed the break of structure here to the upside. There will be this demand zone that has caused the break of structure to the upside. And yeah, of course, if this demand zone here breaks, let me just change the color. So if this demand zone here breaks, that will be a 15-minute change of character to the downside, right? So you can technically you can consider this as a 15-minute change of character, but that's not a change of character in reality. That's not a change of character in the perspective of trading, because this is just a liquidity sweep to the downside. This is just a liquidity sweep for a valuable demand zone that is below the liquidity. That's why I say that you have to value your zones. You have to value the actual zones that you're planning to trade on, and you have to know the higher time frame intentions. You have to know the higher time frame directions, because if you value your zones, you'll know that this zone is pretty valid. I mean, this zone is pretty valid because it has inefficiency, break of structure, liquidity creation. Let's say it slaps on liquidity, and this zone is actually part of the liquidity. It created inefficiency, created break of structure, but there's no liquidity for this zone. This zone is actually part of the liquidity. So that's why you have to track your criteria for your zones. And that's why you have to know the overall higher time frame direction, because of course, if price breaks below this demand zone, that will be technically a 15-minute change of character to the downside, but this is just a liquidity collection in the perspective of trading. And this demand zone down here will be tapped, 1-minute change of character will be happen, and the trend will be continued. And that's exactly what happened yesterday.
Oh, something I always remember, Marcel. You always say it, and it's been stuck in my head since. Don't predict, react. That's it.
That's it. It sounds easy as fuck, right? But actually, it not just sounds easy. It's actually easy. It's easy. Why would you predict something when you can react on what price is actually giving you? Why would you open a position, a risk entry on this demand zone, on this decisional demand zone, when you can actually wait for a reaction inside of this zone and wait for a break of this zone, wait for a reaction on this zone, wait for a break of this zone? You can simply wait for reactions on valuable 15-minute zones and trade on the 1-minute chart based on those reactions on 15-minute chart. Just remember this, guys, 15-minute chart will be always stronger than 1-minute chart. 1-minute chart is a mess. This is a mess. This is a noise for a 15-minute chart. But if you know the 15-minute chart, know the overall intentions of the higher time frame, the 15-minute chart or the 4-hour chart, you'll be able to simply trade on the 1-minute chart based on the overall higher time frame 15-minute chart. Because without the 15-minute chart, 1-minute chart was in noise. Without the 1-minute chart, 15-minute will be just a directional chart. You need to combine these charts together. Okay, guys. Did anyone
Shripping,
understand this?
Shripping, can you hear me?
Yes.
Yes,
of course.
Marcel, I just wanted to ask to be sure about something. When you're looking for change of character, is it the wick that closes above the supply or demand zone, or it has to close with the body?
For break of structure, you need a body. For wick, you need for change of character, you need a wick.
All right. Thank you.
Change of character, wick. Break of structure, body.
All right. Thank you.
Welcome. So,
Shripping.
yeah. Sorry?
If there were no liquidity, you won't enter in the trade.
I didn't understand this, mate. Can you just repeat,
No,
please?
if there were no liquidity, you won't enter in the trade. His LQ is more important.
Can you just type it down, please? Because your microphone is actually not the best quality and I can't hear what you're saying.
Okay, I will type it.
Okay, thank you. Yeah, change of character with spike. But that actually depends on the liquidity too. It depends on loads of circumstances.
Can I use change of character for body?
Of course you can. That's an extra confirmation.
Thank you.
Okay, guys. John, are you here?
Yes, mate.
Keep them with company. I will go and grab a cup of water, please.
Okay. Okay, guys. Everything was correct or fine. If you have any questions, just ask, please.
I have a sale yesterday. It was correct or not?
You have a sell yesterday?
Yeah.
Yes.
On the
And
flip
from
there.
where?
there.
You have a sell from that
Yeah.
place. Yes, and it took stop loss immediately. Yes.
No. I
Oh,
put a
sorry.
stop loss
I can
here.
see. Yes, from that supply. Yeah.
Yeah.
Was it a loss or was it a break even?
Break even.
Break even. So it's okay. It's good. It's reacted to a supply zone, changed character. After that, almost 2 times, but it just created liquidity for the demand zone that I executed from my long trade.
Okay, thanks.
You're welcome.
And have another sell after that, but it break even again.
From where?
You should move a little bit forward the chart.
Sorry, I can't move because it's a flipping chart.
Wait. I'm here. You can talk, but I can't remove my sharing because the recording would have been stopped, I believe. If I close my sharing, will the recording be stopped?
No, but you have to move just to start, just the chart a little bit forward.
Just like this?
Yes.
A
Is
little
that just
more.
like this?
Yes, a little more.
Okay.
John, if you click on view options, you can request control, so you can
Okay,
actually
okay.
control Marcel's chart.
Oh, okay, John, request to control.
Okay, I see this as a change
Okay.
of character in 5 minutes. After that, this was my 5-minute supply,
Yes.
something about that. And change of character here, liquidity building, and I sell from these again.
Yes.
I sell from this. When
Okay,
it broke
sorry,
this
sorry.
okay,
Yes.
okay.
You said from there.
When,
Okay.
yeah. When it broke this structure, I put my stop to break even. He hit my break even and then go.
Oh, yeah. Yeah. You should wait for another change of character because that was a really small change, you know.
Yeah, fear.
It was exactly 2 candles. So
Yes.
that's not that much. Real change of character would happen right here, and after that you could put easily to break even, and you would be in the trade.
Okay, but it was correct trade. Yeah.
Yes, it was correct, absolutely.
Thanks.
And actually, sorry.
Sorry.
After these prices, went down to the actual flip zone down here.
Yes, it would be a really good short trade. Sorry.
Yeah. So you entered here after this change of character to the downside, and you've been tagged but break even.
Yeah.
That's perfectly fine. At least you know that your analysis was good and your direction was good.
Thanks.
Right?
Right?
Marcel, you can, I mean, confirmation entry, but at that point where your provisor is right now, I just opened a risk trade because the previous one already gave a change of character.
So you opened also position here, or what do you mean?
On the left, to the left, there already happened a change of character, right? That analysis,
You mean with this movement?
yeah, with that big wick to the downwards and to the upward, and I opened a position on that yellow line, just you, the horizontal yellow line, just you on there.
Just map this structure. Just look at this. Low point, high point. New low point, new high point. And this was the, this was the last low point, this was the last high point. So basically, this wasn't a break of structure to the upside because it was just happened with the wick, right? So it can be a change of character to the downside. So I don't really know where did you open a position here. The only change of character has happened from this region and this region. I mean here.
The right there I opened a position.
So here was a first change of character because, so this was the last high point, this was the last low point here. Break of structure to the upside, change of character to the downside. Change of character has happened here from this region.
Yeah, there I opened a position.
And you opened it here?
I already opened on that. You mentioned one that supply zone over there.
Okay. So you just simply risk entry here, right?
Yes.
That's perfect. That's perfect. If you're willing to take the risk, that's perfect. That's a perfect entry opportunity. But that's why I always say, if you're confident about your trade, if you're confident about the change of character and the direction, you can actually open a risk entry because there was a good criteria. There was a change of character to the downside with inefficient push. There was liquidity building up for this zone, this actual zone. Top of the zone risk entry would have been perfect here, but you could also wait for a change of character at here or here at this region. So risk entry and confirmation entry at this region was perfectly fine both. So yeah.
All right, Marcel, I was confused there. Which one was, where did the touch happen? Going down?
Here?
Was it that long wick? Yeah.
This isn't a change of character. This is the last low point. So this is the change of character line.
Okay.
Have you got any more questions, guys?
No.
No? If we are using confirmation entry and they didn't get tagged, when we should return. Basically, you should delete your order after the next recent break of structure to the downside, for example, here. So if you had an order limit right here, and there's a change of character or break of structure here to the downside again, you should delete this order, this original order at this region. Okay, So that's it for the trade recap and the questions. What about just doing a higher time frame analysis for the upcoming possibilities?
Yes, yes. Please do that.
Yeah, but in this case, John should have canceled it or not. You mean this one? No. He shouldn't, because this is the origin of the change of character. That's what I was actually explaining here. And there was liquidity for this zone too. So that's what I was explaining at the beginning of the session through 10 minutes maybe. Change of character, origin of the change of character, bullish order flow, liquidity building up for this zone. This zone will be liquidated, and this zone is good. This is a perfect and criteria setup. Flipping Mayo briefly talk about time changes. Basically, I wrote an answer about this to the announcement channel, but New York opens 1 hour earlier than usual. So New York opens in 18 minutes from now, and the lunchtime is 1 hour earlier than usual too. So at this region, for example, in my time zone, you see the numbers down here. Lunchtime zone starts at 12, ends at 1. Here.
That's Hungarian time, right? 12 to 1, right?
Sorry?
The lunch times when you're calling out is for Hungary, right? 12 to 1.
Lunchtime in Hungary is to 12 to 1.
All right.
From 12 to 1. And from 1, New York opens and closes at, I mean, not closes, but the kill zone ends here at 4. This is the New York session. This is the New York kill zone. This is the changed time zone. The origin time zone was the 1 p.m. New York open to, sorry, not 1 p.m., 2 p.m. Here, 2 p.m. to 5 p.m. This was the original New York session, but the time zone has changed by the daylight savings. If it's making
just a trade, this live, can you just see and tell what's going on there?
Sorry?
Right now, I'm in a trade right now. In the live session, I mean, live charts. It's the same situation like the trade which I told before.
You mean you're in a trade right now?
Yeah.
Where?
Yeah, with that huge impulse to the downside, and again it went back to the upside. From there, it swept liquidity and changed character, and I ended on the change of character with the, I mean, liquidity on the downside.
You entered here somewhere.
No, up.
Where?
There. There.
There?
Yeah, there I entered on the first candle, first downward candle.
This is liquidity. This will be liquidated because this is lunchtime. This is all lunchtime.
Lunchtime, okay.
So let's just make a higher time frame analysis. I will delete all of these stuff from here. Please, guys, mute yourselves. So we are on the 4-hour chart, and we were talking about this supply zone, this 4-hour supply zone at this region yesterday. And as I said in the live session, that this supply zone will be weak. And as you can see, this supply zone actually became weak because, as I said, all you have to do is track your criteria again for the zones. And we've talked about this several times yesterday. This zone had more criteria than the supply zone. So basically, the supply zone is unvaluable, which means it will become weak. And as you can see, price is actually body broke above this supply zone with this movement. So this supply zone proved to be weak. Where's the next supply region? We have a next supply 4-hour region here. This supply zone is the same. Maybe we can use the wick at this region. This supply zone is the same like this. It's the same just like this, right? Because it created nothing but inefficiency. There's no change of character here to the downside. On the 4-hour chart, there's no change of character. This zone has actually created only inefficiency to the downside with this movement. So this supply will be proven to be weak, and this supply will be proven to be liquidity because there's a liquidity line. As you can see, this is perfectly lined up with the liquidity. This supply zone will be liquidity again. So on the higher time frame, on the 4-hour chart, I'm still expecting the break of this supply zone too. I mean, on the 4-hour chart, that's not exactly a supply zone. On the 15-minute chart, it will be a supply zone, but I'm still expecting the break above of this supply zone, tap into this supply zone, and this will be our bias decider supply zone up here. This will be our bias decider 4-hour supply zone, because if price taps this supply zone, there will be several scenarios for this zone. We talked about this several times yesterday. So if price taps this zone, creates a change of character on the 15-minute, our bias will become bearish. And we can still expect a deeper demand mitigations at this region, break of this overall daily low point, break of this overall daily or weekly or monthly low point. But if price taps this zone, taps this overall 4-hour zone and breaks above this zone, creates a flip zone here, the overall bullish order flow, which is bullish in this case, this order flow is bullish in this case. I've explained this scenario in yesterday's live session. So if price creates a flip zone at this 4-hour supply zone, the bullish scenario will be continued, and you'll be able to write the actual bullish order flow, expectation order flow to the downside, and we can expect some higher supply mitigations and higher liquidity sweeps at this region. So yeah, this will be our bias decider supply zone. This will be our 4-hour bias decider supply zone. I'm 100% sure that this supply zone will be tapped, this liquidity will be swept, this supply will be broken. So yeah, I'm expecting a tap of this overall 4-hour supply zone. And after this, all we have to do is react on the 15-minute chart. But since then, we have plenty of room to trade between. We have plenty of room to trade between this high point and this supply zone. So we'll be able to execute long trades up to this supply zone, or even short trades down to some demand region at here, at this region. And after the demand mitigation, of some sort of demand mitigation here, we'll be able to actually execute the expectation of bullish order flow after this supply zone. So there are plenty of scenarios lined up for this actual price action. All we have to do is follow it on the 15-minute chart and on the 1-minute chart. So I can actually define this 4-hour zone to this 15-minute candle right here, which has caused the overall inefficiency to the downside. As you can see, here's the real inefficiency, here's the real break of structural change of character, here's the real sweep, liquidity sweep at this region. And all of this liquidity sweeping movement, inefficient movement, character changing movement has happened from this candle up here, this 15-minute candle, right? Okay, what can we see here? We can see that price is building up a bullish movement here at this region, creating a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, building up a bullish order flow after this supply zone. And right now, price is inside of this 4-hour supply zone. 15-minute refined from the 4-hour supply zone, actually, because this is a 15-minute zone refined from the 4-hour chart. So what are we waiting for inside of this 4-hour zone? What can we expect inside of this 4-hour supply zone?
15-minute change of character.
Exactly. Thank you for the fast answer. We are waiting for a 15-minute change of character, which has actually happened, right? We could consider this as a 15-minute change of character to the downside, but we could also consider this as a liquidity sweep, because as you can see, this movement to the downside actually changed character here. This was the last break of structure here. This was the last demand zone, 15-minute demand zone that has caused the break of structure to the upside. Price has reacted on this demand zone here with this movement, couldn't gain enough fuel, couldn't gain enough power to create a new break of structure to the upside and break of supply zone. And instead of breaking above this supply zone and this last structural high point, it just broke below this demand zone. So technically, for change of characters, wicks are perfectly enough, right? So we could consider this as a change of character to the downside.
Marcel?
Yes?
Sorry to interrupt, but you said change of characters where we consider the wick is only on the 1-minute chart and lower?
I didn't really understand. Sorry, can you just repeat it?
I remember you saying before in one of your webinars,
yeah,
that the change of character can only be a wick when it is a 1-minute time frame. Change of character.
Yes. That's why I would like to continue.
Oh, okay. Because that's a 15-minute chart that I'm looking at. I just wanted to. Okay.
Yeah.
Sure.
I will clarify. I will just continue. So technically we can consider this as a change of character, but we can also consider this as a liquidity sweep because there's a bunch of liquidity sitting up, lined up, liquidity trend line here at this region, as you can see.
I have a doubt.
Sorry, let me just,
Does the
please, let me just,
does the wick is enough for the change of character, or the body should close below the change of character line?
let me just continue, please. After that, I will answer all the questions. Let me just continue. So,
Okay.
technically, we can consider this as a change of character, but we can also consider this as a liquidity sweep. It has been decided that this is only a liquidity sweep because this was the character changing supply / liquidity sweep in supply, which has caused the overall break of this demand zone down here. But this zone that has caused the overall break of this zone has been swept out already. So this has been proven that this was just a liquidity sweeping movement to the downside, and this supply zone has been broken. So the bullish order flow might be continued to the upside from this demand zone down here. Okay, let me just mark out all of the zones. So starting with this one, this was the last structure breaking movement to the upside. Liquidity inside of this zone. Break of structure here to the upside. Reaction on this demand zone. Couldn't break structure to the upside after the reaction on this zone again. Failed to break above. Liquidity sweeping movement to the downside. Tap the extreme zone. Tap the extreme zone down here. So this is the same scenario that I was stretching for you. This is the exact same scenario. So basically this demand zone down here, this Dutch candle has caused the original change of character to the upside. This is the origin of the change of character on the 15-minute chart, because as you can see, there was a demand zone again, lined up with liquidity. Price has swept the liquidity to the downside and changed character with body closure to the downside on the 15-minute chart, as you can see. And after the liquidity sweeping movement, price has changed character back from bearish to bullish again, here with this movement, with inefficient 15-minute movement to the upside. So this is the origin of the change of character. This is a decisional demand zone up here, which has liquidity, which is liquidity for the downer area, liquidity for the origin of the movement, right? So that's what I was explaining at the beginning of this session. The character changing demand zone / supply zone will be always stronger than the decisional one. So this was the character changing demand zone that has changed character here to the upside. Liquidity built up for this zone, liquidity sweep this movement, tapped into this demand zone. After a tap of this demand zone, it continued the overall bullish order flow and actually changed character here to the upside again. So here was a new change of character to the upside on the 15-minute chart, which was caused by this candle down here, because from this candle, the inefficient movement has created, as you can see, here's inefficiency, here's the change of, sorry, I didn't mean to mark it as liquidity. I meant to mark it as change of character. So from this candle, inefficiency started, change of character started, and seems like price is currently on the way to retrace down to this demand zone. So as I'm always saying, all you have to do is react and don't predict, right? So at this zone, all you have to do is react. React on what price is actually giving you. If price taps this zone, all you have to do is wait for a 1-minute reaction. All you have to do is wait for a 1-minute change of character or 1-minute break of this zone. So if price taps this zone, I'm drawing the actual 1-minute chart movement here. If price taps this zone and creates a 1-minute change of character to the upside, and let's say creates a perfect entry criteria, you'll be able to execute a long trade after the mitigation of the zone on this fresh and new created demand zone, because the overall order flow is still bullish. We are still expecting bullish continuations. All we have to do is find a good retracement point. All we have to do is find a good entry point. And this demand zone could be a good entry point. Of course, it could be considered as a weak low because it couldn't break above the last strong high. This could be considered as a weak low, but it also changed character to the upside. So that's why I always say you have to react. You can't just decide if this zone will hold price or won't hold price. All you have to do is react on this zone. But if price breaks below this zone, so let's say it creates a retracement on this zone and breaks below it, you'll be able to ride the expectation short order flow down to some more valuable demand regions, for example, like this, because this demand zone has liquidity just about, as you can see, this is a whole liquidity line lined up for this demand zone. So this is a liquidity line for this demand zone. All you have to do is react. Wait for your reaction on this demand zone. If this demand zone breaks, you'll be able to ride the expectation short order flow down to this demand zone. If this demand zone is being tapped, all you have to do is wait for a reaction on this demand zone. If price changes character here on this demand zone, you'll be able to ride the expectation long order flow. If price breaks below this demand zone, you'll be able to ride the expectation short order flow to the downside to some more valuable demand regions, for example, like this. All you have to do is react on these zones. All you have to do is react on the 15-minute zones. you don't have to predict anything. You don't have to predict what price is actually going to do. You have to mark your 50-minute zones out and you have to react on those zones.
Bro, can you please let John in because he had some internet problems?
No.
Thanks. Okay, fine.
He'll be missed out. Where is he? Okay, got him. So is it understandable, guys?
Yes.
I'm okay.
One question.
Yeah.
Thank you.
We should how I say, we should use extreme for change of character, or decisional is enough.
Depends on the liquidity.
Okay.
If there's liquidity for the extreme, use the extreme. If there's liquidity for the decisional, use the decisional. If there's no liquidity for the decisional, then the decisional will be the liquidity for the extreme.
Oh, okay, I get it.
So in this case, I'm actually expecting the break of this zone. I'll be expecting the break of this zone. And my plan today is to wait for a reaction on this zone. I'm actually building two scenarios for today. My first plan is to wait for the top of this zone and wait for a reaction on this zone. My lower probability setup, lower probability scenario for today is the change of character on this zone and the long entry based on the 1 minute demands on the test change character after a top of this zone. This is my first scenario and lower probability scenario for today. Second scenario is the higher probability scenario, which I'm expecting for today, is the price tap this zone, creates a break of this zone and short continuations down to this demand zone, because this zone is much more valuable than this one. This demand zone down here could create a strong high break. Here, as you can see, this was a strong high because it could break below the strong low. So this is a strong high, and this demand zone actually broke above the strong high point with this inefficient movement, has liquidity just above it. So I'm actually expecting a tap of this zone. That's my plan for today.
Also, it's a flip zone, right?
Yeah. We could say that it's a flip zone also, because there's the supply zone and this demand zone flip that zone. Yeah.
That was my expectation also.
We didn't ask. Just kidding. Okay.
Thank you for letting me in.
Goodbye, John. Say bye to the team. You'll be missed.
Oh my God.
So, yeah, guys, is it all clear? All of the scenarios drawn up for today. Yes. All of the scenarios could happen. What do I always say? What do you have to do?
React.
React, don't predict.
Exactly. Just say it once again. Everyone, just say it. I want to hear it. Just say it.
React, don't
predict. Don't predict.
Thank you.
And what's the other one? Spot the liquidity.
Before you come, liquidity.
Yes, exactly.
Just keep these two things in your mind. Okay, guys? Just keep these two simple things in your mind. Okay, that's all you have to do. React on what price is actually giving you. Let me just switch to the 1 minute chart real quick and look at the 1 minute chart. But before we look at the 1 minute chart, let me just continue the monologue. So, oh my God. Okay, goodbye. Liquidity slip to the upside. It's happening. I believe there were news. Yeah, this was a liquidity sweep to the upside caused by news. Okay, let me just continue the monologue. All you have to do is simply react on the 50-minute zones. You have to understand this. You literally only have to understand this. React on the 50-minute/5-minute zones and use the 1 minute chart to actually react on those zones. And on the 1 minute chart, you'll find perfect entry opportunities. Perfect entry opportunities if you're using the 50-minute/5-minute chart lined up with the 1 minute chart. As you can see, all of my trades that I take is based on the higher time frame. I'm actually following the higher time frame order flow, right? I rarely take a counter trend trade. I more often take a main trend trade and follow the actual higher time frame order flow because it's easier to trade with the flow than against the flow. And yes, I'm always waiting for a high criteria setup. I'm not executing a low criteria setup because that's literally no point to execute a low criteria setup when you can simply wait for a high criteria setup. Of course, you'll be sitting on your hands more. You'll have to wait more, but we have time. We have plenty of time to wait. It's just March. There's the whole year for trading. There's the whole week. There's the whole month for trading. You can just simply sit on your hands and wait 2 hours straight and sit in front of your monitor and glue your eyes to your monitor and just simply wait. Why would you risk your capital when you can just simply protect it and wait for the high criteria setups? That's all you have to do. And yeah, as John said, use the criteria tracker. That's why I've actually created that freaking high criteria tracker. It's so fucking easy to track your criteria with the criteria tracker. All you have to do is value your zones, value your entries, and you'll immediately know that which zone will hold, which zone won't hold. It's easy to use. Okay, guys? I just want to hear, okay, if you understood it.
Okay.
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 Perfect.
Emma, can you tell me when is the lunch time?
At my time zone, it opens here at 12 p.m. and closes at 1 p.m.
12, right?
Yeah, but that's my time zone.
Okay, I'll convert it.
So what's the plan for today? We're waiting for this zone to be tapped or waiting for another reaction. Okay, just once again, we are waiting for this zone to be tapped. That's the original plan, right? I was building a plan for today. That's my whole plan for today. But if the plan changes, if something other happens than this plan, so for example, the price creates a breakout structure from this here to the upside and breaks the actual structural high point here from here to the upside, I will create another plan for today. I will adapt. Actually, all you have to do is react on what price is giving you and adapt if price is not giving you what you are expecting. And just react and adapt. If price breaks this high point, I will build a new plan. I will build a new plan based on the new demand zone that has been formed. I will value my zones. I will value the liquidity. I will value everything. I will revalue everything. So basically, that's it. That's it for this session. Any more questions, guys?
Just one. Can you switch to 50 minutes?
Yeah.
If price break that demand, but not this week, do you consider as a chart?
Yeah.
Yeah.
That will be a change of character.
Okay, thanks.
Because this is the last demand zone that has caused the change of character to the upside.
Yeah.
Any more questions?
Does the wiki is good enough for the change of character, or the body should close below?
On this zone, on this 15-minute zone, I would recommend you to wait for a 1-minute body closure. So on this zone has to be broken with a body closure because there's liquidity also. So if price creates a liquidity sweeping movement, that will be happening with the week. So you need a body closure to break below this zone.
Then the wiki is not considered as change of character. It will consider as an liquidity swept, is it?
Yeah, but that's in the video course. I'm actually explaining it in a video. That how can you actually identify if it's a character change or if it's a liquidity sweep.
Okay. Thank you, Flipping.
Of course, you're welcome. So, okay, guys, that's it for today. I'll be sending some quick markups about these 15-minute price action movements. So yeah, thank you for being here.
Gabriel, the criteria tracker is in the Discord resources. You can find it in the PDF. It's in the Discord resources. Sorry.
Okay, thank you, John. So thank you guys for being here. I hope you like this session too. I hope this was helpful for you and it could actually give you some more insights about price action today. So yeah, wish you all a beautiful trading day. I might not be trading today and I might not be available, not today, sorry, tomorrow. So I won't be available tomorrow because I have to go on a trip. So yeah, thank you guys for being here. Wish you all a beautiful day. I'll be sending the markups, I'll be sending the updates, I'll be sending a recap video if I take any trade today. Yeah, guys. Take care. Goodbye.
Take care, guys. Goodbye.